I've heard a lot about are people losing jobs, mortgage companies closing down, people making changes, and this major compression in the market that's creating this. Well, what is the compression? They wanted to slow down inflation because we've been 7% or higher, and they want it at 2%. So they have been adjusting the interest rates. This is an indicator for just purchase loan applications made. And you can see here in October of 22, 41.9% decrease in mortgage applications, which is a leading indicator for a result that's coming in the future, a future indicator or a future result. And so when there's a drop like this, we did have a lot of banks react, and a lot of places are starting to plan for that. There's less people applying for loans because there's less people that can afford it. But the normal is not the last 3-4 years in interest rates. You look back to 1972, and that is probably where we are going to end up, is near 8%. And so that the middle ground there of 77 to 92, where we were above that mark, that is really what the normal has been. So you can see we've been way below normal. And so I think that as soon as we all kind of come to grips with this is our normal and it's not where we've been, we'll be able to figure out exactly, that homes are going to cost money. They're going to cost X amount of money if we're borrowing money. So now the affordability is realistic and not, based on free money, because the national average has always been that high. And so, you hear a lot of those things and how bad it is. Well, it's not that bad. It's just average of what it's been. And we're getting back to that normal.
I think it goes back to the casino. We saw that time that we had that chance for that money, but that's not normal, right? So if you didn't buy at that time, historically, though, we're still looking good overall.
Yeah. And I wouldn't equate necessarily a casino with housing. Because the house always wins.
The house always wins. Jeremy, you always win when you buy a house. Long term, always win.
And this is the house that always wins, owning a house. Well, good. That is it. We've covered October. We wonder what's the market's going to bring this next year or 2 or 3 or 4. We do anticipate that it is going to continue to soften a little bit. Rates continue to go up, so people can't afford as much. What do you guys anticipate? Just if you had to say 2023, what's going to look like?
Well, I'll preface it by saying that we were with Gary Keller a couple days ago, and he said the most dangerous tool we have right now is our own opinion on the market. And so with that being said, I mean, the predictions I'm seeing is that the market should basically have somewhat of a recovery starting in 2024, but we'll see more of the same for sure for the next, 12, 15 months. So.
Jessica?
Yeah, I would agree with that. I think that we're going to see still a little more dip. We're going to see it still coming down a little bit, and probably not definitely not a crash, but I think we'll see it. They're trying to work on that inflation, and it's always a dangerous game. We're in those political campaign years. You never know what's going to happen. So yeah, I would say don't plan on it shooting for the sky. But if you're going to buy, still buy, because then hold.
Yeah.
If you're going to buy, buy now and hold.
Yeah.
If you're wanting to sell now too. I mean,
and
today's going to be better in 6 months.
And move in 6 months and sell it and think you're going to make money, probably not the time to do that.
Yeah. If you're going to sell in the next year, sell now.
Yeah, sell now. Well, good. That's it for the stats. We'll see you guys next month.
Yep. Thanks. See you later.
Thanks, everybody.